Recording. All right. So thank you everybody for coming out today. So today is basically session 3. And session 3, what I'd like to kind of talk about today is like in the past, we've talked about a lot about, doing the budgets and doing the profit losses and work, understanding your business, how many contacts you have to make and all that kind of stuff. What I'd like to talk about today in preparation for next week's class, next week, we're going to have Jeff Rathgaber come in, and he's going to talk a little bit about, or have the hour to talk to you guys about the trends, more on the banking side and financial side. So, because as we move forward into, because as we all know, yesterday was an announcement of another 0.75% increase in interest rates. So there's trends, and that's what I want to talk about today, because it actually timing wise is perfect for what's happening. And I want to talk about the trends and how the market goes and the ups and the downs and the growth of the markets. I want to show you where you can go in and you can dive into it and break it down a little bit deeper if you guys want to do that. But part of our business is that we continually get asked by people, what's the market doing? What's your prediction? What do you see in 6 months? Or what do you see in a month? And if you have nothing to base that premise on, when that client asks you that, you have no clues. And so you're like, well, and then you either make up stuff on the spot or you do the proper thing, which is, you know what? This is I don't know the answer. Let me go find some specs and some stats or whatever the question and answer would be, and I will get back to you. So there is no crystal ball. There's no website we can go to that's going to tell us what the market's going to be doing, but you can base a lot of your answers on what has happened historically. And that's what I want to talk about today. I also want to talk about where, as you guys have gone through or hopefully going through, I want to talk today about what is going to be happening with your, where you go about trying to get your business. So I want to show you guys where you can get that information from as well. And so that's kind of what I want to talk about. And then Jeff's going to come in next week, and Jeff's going to talk about, what's happening, and he'll probably talk some historical numbers as well as to what is happening with the whole banking world with the interest rates and things like that. So good morning. So back when I first started selling real estate in 95, the interest rates were 9 and between 8.5% to 9% plus. And so I've seen this before. And so when you start talking historical and all that kind of stuff, we're going to talk a little bit about that today. But that's the important thing, is that you have some sort of a baseline to say, you know what, it's happened in the past. And even for somebody like a Barry Chiliak, who's been in the business from the 80s, they would have seen some of the numbers actually coming in at 18%, 20% interest rates for mortgages. And so everybody at that point went, oh my God, that's unbelievable. I could never sell. But those are some of the best years in real estate as well. So there's lots of positives. There's lots of things that are going to happen, even with the interest rates going where they're going. But the key is that the thinking has to change. And the thinking that we all as agents need to start to educate. When you sit down with the buyer needs to be re-educated. And because again, if you go back to when the interest rates were high, people couldn't afford exactly what they wanted. They had to build to that point. And as they build to that point, basically it becomes a situation where you can't, if you want in today's market, if you want to buy that $500,000 house or $400,000 house, that buyer was, because interest rates were so low, were able to go out and just buy that house automatically because the interest rates allowed them, based on their income, to buy that $500,000 house. But today's market, with the interest rates climbing, that is no longer the case. Their maximum of 500 is no longer a maximum of 500. It could be a maximum of, depends on how they play, 5-year, 3-year terms, all that kind of stuff. But the qualification rate continues to climb. So that 500 might become 450, or might become 400 or 375, whatever that happens to be. And those numbers are important, because now you need to educate the buyers a little differently on how their strategy to achieve that dream house will be. So it's a matter of buying that smaller house that might need a little bit of fixing up. Great opportunity. Prices are low because it's a little bit rougher. Fix it up. Build the equity by fixing it up, and build the equity by paying it down. Now your down payment on your next house, and then you make that move up. And 15 years ago, even 20 years ago, people would make a move every 5 years for a period of about 10 to 15 years, might make 2 or 3 moves, but then ultimately they're in that dream house that they want it to be. And because each house that they did, they bought for X amount of dollars and turned and pulled their down payment out of that one, plus equity to put down on the next one. And then so on and so forth, all the way up. And it's an actually better way of paying down your house faster as well. So these are the type of discussions that we need to start having with our clients. And in some cases, it's somebody, you might have a buyer that wants into Stonebridge that used to qualify for 400,000 or 450,000 that can actually buy a house, now can no longer afford a house because that number for him has dropped him under the threshold for an average house in a neighborhood. So, but guess what? That's where townhouses, and we've talked about this before, where townhouses are going to become more active, and we're already seeing it. So, my crystal ball is not as fuzzy as I thought it was, but we're actually starting to see the condo market rebounding back. And that's because, again, as we as agents have discussions with clients, maybe if they have kids, an apartment style condo probably isn't a great thing for kids, but a townhouse could be. And a townhouse is now more affordable, allows them to get into the Stonebridge neighborhood for under 400,000 and potentially closer to the 300,000. So well within their range, and it becomes an affordable option for them. So these are some conversations as we're moving forward with the higher interest rates, and I haven't heard Jeff or heard of what the actual fixed rates are going to be swapping to or switching to. But again, they're definitely going to be going up to some point. So keep that in mind. So let's talk about market trends a little bit. But before we get into showing market trends and all that, let's talk a little bit about reviews of our sessions 1 and 2. So the first question that I got for you guys is, how's your business calculations coming? Has anybody taken the time to actually look at that business calculator, figure out what their average commissions are, and start to either do one for this year, to the remainder of this year, or to start even planning for next year's goals? Have you guys?
It was pretty easy.
Okay.
I haven't done much work yet, so it's pretty easy, but I think planning for it's just like a good way to get ready for next year already.
Okay. Yeah. And it's true, because what you do today will basically translate to something 3 months down the road. So, and this is where, again, when we start talking, Gary made the comment last week about the fact that he has he sold a house on Christmas Day, right? So lots of people will start to shutter down in November instead of working. And so November, December are great times to do more networking with your sphere and your friends and family and everything else, and asking for the business, because what you're doing in November rolling into December will more than likely translate into something that's going to be happening in the early spring. So it'll help kickstart your next year a little bit as well. So Christmas parties are coming up, all these different socials and different things now that we're able to get kind of back into the swing of the market kind of a thing. So so if you haven't started your business planning and really started to get that part of it organized, now's the time. Is definitely, especially whatever you're planning for next year is going to happen, but even for this year, as you start to work and get in touch with people and start to have an idea what you need to do, it will help you for the remainder of this year as well, being profitable and maybe picking up 1 or 2 or more deals that you never knew you could have had, just because you start making some contacts. Okay. Everybody here, I think, has completed their source of business chart, that little pie chart that was sent out. That's good. How many of you have started inputting your numbers for the year, for this current year, into a profit loss statement? You have? Perfect.
I started, but I haven't reviewed because it's skeptical.
Okay. And that's where getting organized will help your business grow as well. Like if you have things organized and ready to go, it's even tax time is when?
April.
When, and you'll see this, and this is why this is important. April is tax time. April is also the main upswing in our business. do you want to be out selling or do you want to be doing income tax? And collecting all those papers from all these little pockets that you've got them stuffed into or envelopes that you got them stuffed into and doing all that, right? So it's nice to know that come February, your entire year profit loss has all been done. Like the process that I have, and this is my accountant loves me because I basically take my my statement from the office and then from there I take all my invoices for the month. I take all my when you get paid, you get the statements, your ETF statements. All of that for me is all put into one package for the month, stable for the month, put to the side. And then my February is done the same year, month after month, all the way through the year. And then I take my quarters. So when Audrey asks for all my GST numbers are there. I have it ready on a different little spreadsheet thing that I've done, but you can add up your GST however you guys want to do it. And when I get that statement from Audrey to say, what is my GST? I can look at that sheet and it'll tell me exactly what my GST is. And I take the sheets that she sends back to me and I package that into a brown envelope. And that's my first quarter. Every quarter following is exactly the same. Now, when income tax time comes, all I have to do is wait for my T4 from the office, wait for any T5s or whatever through investments, and then package all that together in a separate envelope and tax receipts or my write-offs, charitable donations and all that kind of stuff, package that into another. I have 5 envelopes, including my profit loss statement. And I take that down to my accountant and I said, here it is. He looks at it and goes, I don't have to input anything. All he has to do is go to my profit loss statement and click off the numbers and feed it into the categories that need to be written off, and it's done. So it not only saves you time in terms of getting things filled out and that, but it also saves money at the lawyer's office. Now the lawyer's money is time, and or time is money, I should say. So at that point, as you're working through all the different numbers, your accounting bill is racking up. But more importantly, if you are at the end of February having to sit down and gather all these different receipts, and now you got to start trying to add everything all up, it becomes a much more complicated time. But more importantly, it takes time away from your business. As February and March, April starts to ramp up, you are now focused more in your office, sitting there trying to get your income tax stuff done. So a lot of my stuff is all done at the end of December. All I have to do is wait for a few little things to come in. As they come in, they get thrown into another envelope, and then I'm ready to go. So, okay, so it's very important. If you haven't started working on it now, start. And then building for next year, you'll have ability to create a new tab in that Excel spreadsheet. Like for me, I've got each tab for each year, so I can look back. So if I'm looking for trends as well for my business, I can look back for year after year over my profit loss to see when I actually got paid, what months were big months, and that will help me on my trends for 2023. Okay. All right. Have you inputted your commissions into your profit loss statement? Again, if you haven't done that, then start working on that kind of thing and get all of that kind of information gathered, because it'll give you a good look at where you are on for this year, kind of a thing. Okay. Now, the other thing, I know when I asked the question last week about how many people actually have a day timer and or don't have one, have you picked one and have you started to use it?
Like aside from your phone, or
well, it could be your phone. If the phone is your day timer, then that's perfect. But more importantly, if you use it, even better.
Yeah.
Because some people say, well, I got it, but when you open it up and look at it, there's nothing on it because you don't really have it, kind of thing, right? So, but that's the stuff that you need. If you don't have it yet, get it, because as you get organized, you will become more time efficient. And when you become more time efficient, you'll become more profitable, because you're not running around trying to remember all these things or forgetting about clients or forgetting to make a phone call. Like if you're talking to a client, you said, you know what, I'll give you a call in a couple of days. Perfect. Out the window it goes, because you had 5 other things that came in that same day. But if you had a day timer, a couple of days down the road, you make yourself a note on your day timer to give Nancy a call and follow up on whatever conversation. Right, so that's the importance of the day timer. Oh, Dee Dee's got a question, I think. Oh, Dee Dee, you haven't yet. Oh. Okay, all right. So let's talk trends now. Okay, so I'm gonna bore you with a few little charts and different things. But let's start off by basically looking at a few different trends. Now, Trendly, has anybody gone on to Trendly or know what Trendly is?
I do know it is, but I don't know.
Okay, so we're going to get into that, but let's talk a little bit. So when we go into Trendly, I'm going to show you guys, the market trend for this year, from basically January to today. Then I'm also going to show you the 3, 5, and 10 year, so you can start to see a definite pattern in the market. And if you wanted to go back further, then the data is available. So if you want to go back 15 years, whatever the case may be, it's there. Now, to get to Trendly, I'll just log into it here first. Okay, I gotta reshare, I guess. So stop sharing. Okay, so you can see this, Dee Dee?
Yeah, I can.
Okay, perfect. Okay, so this is Trendly. Now, to get to Trendly, if you go onto your SARS, not SARS, SRA, I guess. This is your front page, and you can go to this right here to get into directly into it. Okay. Now, once you're in it, down the side is a whole bunch of different charts. You can work days on market on the average, and this works on all the MLS data that you would possibly need. You can also get, if you're techie, a lot of these charts can also be put onto your website. So if you want a live active feed as to what the average house price in Saskatoon is going for, then you can easily, you can easily do that as well. Okay, and then you hear about website widgets. Well, in here you can get your website, you can get market gauges and all these different things like this, and then you can give date ranges as how you want it to be for average house, days on market, all that different kinds of stuff. And it's a feed. Once it's hooked onto your website, it will be there forever. So you can, and then it'll just continually update. You can do 5-year averages, 3-year averages, whatever you want, and then what your current year to date numbers are for whatever it is, average house price for condos, for apartments, anything that you want to break it down to be, kind of thing. But what we want to talk about is we want to go to market reports.
There's some features you have to pay for.
There are some, I believe, yes. I use this a little bit just to get the trends, and once you're in the business long enough, you'll kind of understand the trends naturally. But for now, and then again, I go back to this all the time, and I just look to see if my trends are right. So the only thing that's happened now since COVID has happened is the trends have kind of disappeared a little bit. But if you look back, you'll see this still kind of follows a trend. They're just a little bit higher peaks. So let me just go back here. Okay. So I'm in the market trends. I'm in the sold listings and the count. So that's what this trend, or what this has done. And I have gone, now if I go back to here, I want to look at January 22, so January 1st to today, which is the 8th. Apply. So this is the chart for this year. Okay, so what we see is in January we see a 248 sales. Market's kind of slow. As we go to February, the sales jump up as it starts to follow that curve upwards, as I was kind of saying. In March, we see it jumps again up to 493. A little bit of a lull the following month by just a few, and then in May, and we're up to the highest at 550 or 541, 534 in July or in June, and then you can see in the summer months what has kind of happened. And that's predominantly what happens. Now, if we take the same date range and we want to go to the last 3 years now. So now we've got, as we go back here into January of 2020, you'll see the pattern starts again on the bottom end side. And it starts to build. And this is March of 2020. And then for some reason, it makes a drop. Anybody have an idea why between March 2020 and April 2020, you did
The
a
world
drop?
was shut down.
Right? So that shows up on our chart. But then what happens? Things start to open up and then basically shit gets crazy, right? So from there, it takes a rapid increase in May, June, July is the peak month. But like the normal trends are in this real estate market, we start to see a decrease over the summer, August, September, October. Things drop again, and that was, I believe, another lockdown that started to happen. But again, this is not an uncommon thing to see. And then 2021, we start January, and then by March, it is on a major upswing again. Okay, so as we're seeing, we see that March builds. So again, January is a little slower. February, March is really when things start to swing upwards, and we see the April and the June as the high months. Summertime comes, boom, 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 down into September, and we've seen a bit of an increase in November, which is we see that last little rush of stuff that kind of in that fall. But come December, we're starting to see that drop, and we hit the bottom again in January, and then we start to climb in 2022. Now we go back again and take a look at a 5-year. Okay, we start to see a pattern. And this is the patterns over the years. Now, when clients start to ask you, when's a good time to buy, when's knowing the markets, this also will apply when you guys go back to that profit loss statement. And when you're doing your calculations on your commissions, if you want to do, let's say $100,000 in a year, you can't just take 100,000 divided by 12 and say, this is how much I'm going to be doing. You will need to keep in mind these trends and know that this is when you're actually going to get paid out. And so when the deals happen, this is how the trends are. So when you're setting up your profit loss in January and February should be very minimal. And then in some cases, some people say, January, I don't really, based on my past history of sales, I don't even get paid a deal in January. So then that January could be a month where it's zero. So you're going to be in red in January. But then in February, March, April, that's your climb month. And so you make up for February, make up for January, maybe in February, March kind of a thing. Okay. So this is important to understand now. And also when people start talking to you about what the market's doing, when's the best time to buy and to sell? Well, based on historical data, you now know that springtime is the best time to sell because that's when the most buyers, everything is most active out there. And that's the best time to do it. But in the same breath, as a buyer, that's when the most selection is going to be out there because that's when the things are happening. As a seller, you're going to have a lot of buyers out looking as well, but it's a kind of a double-edged sword because the buyers are sitting there going, well, that's great, but now I'm in a lot of competition. Now I'm in a lot of, as a seller, you've got a lot more competition as well. So depending on what the market's doing, if we're in a buyer's market or seller's market, if it's a seller's market, it doesn't really matter. But if it's a buyer's market, if there's a lot of competition on, it might drag your house price down a little bit. Whereas if you wait till maybe fall, it might be a better time to sell because the product might be a little bit less and now there's not as much competition. So it might hold your price up a little bit. So it depends on, again, if we're in a buyer's market, seller's market, as to when when your client might want to, put their house on the market. If they're buying and selling, everything's going to be a wash for them because they're going to pay more, they're going to get more. So everything becomes a wash. But as a seller that's exiting out to do whatever, or as a buyer that's coming into the market, they got there's certain times that may be more beneficial based on historically. Okay, but again, we see the same pattern going up and down. Do you have a question? No.
This is all about Saskatoon. Right?
This is just Saskatoon. Now, within these charts, you can also break it down into neighborhoods if you want. You can break it down into, if you want to look at something for Martinsville or for something for Warman, whatever, wherever the neighborhood is, you can actually do that. Okay. All right. So then, so these are the trends. Now, again, if we go back one more time and we do a 10-year average, again, you see the same little heartbeats going as we're going through the 10-year pattern. Now, the nice thing about this, and you'll see the, some of these numbers start to increase on a monthly basis, and the chart's kind of working its way up higher and higher, because as we, as a city grow, the number of units that we actually sell increase. And so some of the years, like in 16, 17, 18, are, we're still following the same pattern, but we're just not selling as much product. Because in those years, we were basically in a buyer's market. Now we're in a seller's market like we were back in here. And so now we're starting to see the peaks get a little higher up because we're doing more volume on a monthly basis. Okay, any questions on this?
Do you know, I can't figure out why 15 or 16 we have a slower one year, 2015, 16.
2015, 16, I would have been kind of back in here. So the market, there's a buyer's market, there's seller's market, and there's a balanced market. Those are the three different types of markets. In that time frame, we definitely were in a buyer's market. And so just not a lot of, there was obviously some things going on within the markets at that point that just slowed the buyers that were looking to buy. So there's a lot of listings on the market, but the house prices were coming down, condo markets were dropping like crazy, and there just weren't as many sales happening. The confidence just wasn't there. And so, and again, that's where when you start, even when Jeff is here next week and talking, when we hit COVID, that's where so many agents and so many analysts and everybody else were, for me personally, I was thinking that the market was going to crash. We're in lockdown. We're handling a pandemic. Like in some of these up and down markets, I've seen markets because farming has been bad down south. John Smith down south by Swift Current didn't have a good crop year, so the whole market kind of slowed down, and we swung into a buyer's market. That kind of potash took a little bit of a hit, and so we're down. Whatever the reason, the market kind of goes down. We hit a pandemic where we're literally locked into our houses and told to stay home, not do anything unless it's absolute have to be. And we have one of our best years we've had in a 10-year window. And there's no rhyme or reason to it. So it's very hard to predict what's going to happen. I think one of the main reasons why the market did what it did when it did was because interest rates were down to like 1.69, 1.79. That drove. If our rates were where they are at now, and we got hit with that first wave of the pandemic, and we were told, I think at that point we may have, there was no stimulant out there for a buyer. I think everything would have shut down, and that would have been the end of it. But again, that's all pure speculation.
You have done. Every time I see my clients, they bring up the current market and they start talking about interest rate.
Yes.
And everybody says we think the house prices are going to go down. Should we wait, or should we go ahead? Those confusing questions like that. Those are my questions as well. So.
Yep, and that's where knowing the trends and the market. So right now we are in a seller. We're still in a seller's market, and so even if we went from a seller's market to a balanced market, Saskatchewan is, and this is where you gotta. When the media starts talking, quite often it's coming out of Toronto or it's coming out of Vancouver, and that brush gets painted right across Canada. Like every market in Canada is getting hit with the same thing that Toronto's doing. Toronto has a huge influx of immigration. They have a huge flux of other factors that play in, and their market looks like literally a heartbeat, and it can go up and down and spike and then drop like the heart stopped all within a year. Like it's crazy. Here we don't have those big spikes, and we have little rolling hills, as you can see here by the chart. So we don't have, because we don't have those spikes, Saskatchewan also is a very rich resource province. We're probably one of the richest provinces that way in all of Canada. The only thing is that our government really doesn't exploit it. Like they don't overmine, they don't over drill, they don't, like Alberta drills constantly for oil. And that's because they need the money, they want the money, they want to have that rich feel. Canada or Saskatchewan doesn't, but we have, like, if you look at all the resources that we have, we got rare earth metals, we've got uranium, we got potash, we've got lumber, we've got grains, we have oil, we have it all. And because of that, our market here overall is a much more stable market than other provinces. And so with Ontario heartbeat could go up or down based upon what's happening in the car manufacturing business, or because they're more of a manufacturing, they don't have the resources that we have. They're all about manufacturing. So if all of a sudden Ford announces that they're not building cars, or they're not doing this or that, or GM or wherever one of the plants are out in Windsor, that happens, done, until they announce that, some other new incentive is coming, whether it be from the government or whatever. And they have other factors that play into it. So when your clients ask, you have to really drill into them that just because they heard it on the media that Saskatoon or that the market is going to crash because of interest rates, you really got to ask them where that source is coming from. And then from that source of where it's coming from, you need to reassure them that we are not that market. We're not Toronto. Never have been, never will be. And going back historically, looking at these charts, if you compare this chart to a Toronto, they look nothing like it. And so when you start talking interest rate and they start talking about the housing pricing and everything else, there's still a demand. We're still in that seller's market. So there's still a high demand for houses. There's no worries that something's not going to be there, that we're not going to, that the house prices are going to crash down. We're not going to, I really don't predict that. Jeff might have something to add to that next week when he talks on the banking side of things, but on the real estate side, no. It may come to the point where, because there's still buyers here that have the money and they want to buy something, they want to own something. And that goes back to the conversation point that I made at the beginning. We as agents need to re-educate the buyers and, say, you know what, you might need one step before you get into that big house. And so let's start looking at that first step and moving forward. Like so many first-time home buyers are out there looking and they want to live in the house that their parents had. Well, they don't understand that their parents made 1 or 2 moves or 3 moves to get to that point. So you got to educate them, and that's our job, is to educate them. And so when they ask that question, what do you think the market's going to do? The market's going to crash. Nope, I don't think it is. I think it might flatten a little bit as people can digest what the interest rates are going to be, but the market's back in 1995. And I think Jeff's going to talk about this next week, is he's going to talk about what the interest rates were back in 1995 and, 1980 and some of those, some of those other rates, and show, from there you can do, if you want to go back further back.
Yeah, my grandparents paid 19% on their first house.
Yeah. Yeah, and people say, well, and then, yeah,
Credit card.
yeah, absolutely, sharks, right?
Gross.
So, but there's positives and there's negatives. So as you look at the trends, as you look at the numbers going back, and you do a custom range if you want to, and go back, whatever years, but and then you say, well, that was house back then was only $100,000. Yes, but what was minimum wage back in 1995 or
Okay, all
1985? Everything's relative. Everything's grown. Everything has shifted for the most part, except for minimum wage. But people's wages, if you made $50,000 back in, even if you take a look, let's say the Centurion Award, when back in the mid 90s when I first got into it, I think it was $160,000. That's what you had to make to hit Centurion on the gross dollar. Then it went to 180, then it went to 220, and then so on and so forth. And that sheet that got passed around, I think it's over $300,000 now.
Almost there, guys.
Yeah, almost. Collectively, we might get halfway. So, but that's the whole thing. That's what the market has been doing. So interest rates, no, but making some adjustments, absolutely. And that's what buyers need to really start to think right now is you know, they may not be able to get into that big house, but they may need to downsize. They need something smaller to start to fill the need and to move up. So if they ask you what the market's going to be doing, the market's always good. It's always, you know, it's always good. It depends on what side of the fence you're on. If you're a buyer, you're a seller. So if we're in a buyer's market, seller's market, it's always a good time. But if you're in for me, the balanced market is the best. That's where there's an adequate amount of listings to show and to sell, and enough buyers. You're not getting into competitions. Everybody gets a fair shake at the listings. That for me is the most enjoyable time to do it. Buying side, seller side, you know, markets and stuff like that. Yeah. If you're representing a buyer and it's a buyer's market, great. If you're on a seller and the seller is making lots of money, that's great too. But to be fair to all parties, the balanced market is the best one to be in.
Do you feel like it's getting closer to a balanced market now?
I haven't looked at those numbers lately, but I think we are starting to,
Yeah.
we'll start to swing into that a little bit as
Yeah, feels
we
like
do
it.
into the fall. And, you know, because I just showed a house yesterday, it was 5 days, 5 days in the market, and it was still in the market. Right? So
Yeah. but
it's like,
then-
holy
but
crap.
Then like Kyle Pipo went up on Eastview and it sold, they had 12 showings yesterday and it sold last night.
Yeah.
It was listed yesterday.
Yeah.
You missed it.
And
Correct.
there will still be pockets that will be hot, and that's what
Yeah.
we, you
Some
know,
days it's hot and some days it's.
Yeah.
A little cooler.
On that balanced market, I'm 100%, you know,
Mhm.
with you, because, you know,
Yeah, I agree.
I lost so many deals just because there are so many competition on
Oh,
one
yeah.
listing.
Oh, yeah.
Yep.
And then you lose your client because they've had so much heartbreak that they're like, well, we're just gonna wait because this
Yeah.
isn't fun anymore.
Yeah.
so
Sucks.
that's where the understanding this is important. Okay, so this will help those conversations
Mhm.
as you start to study the charts and every day we should be looking at the solds, what's selling, what price range is selling, what side of the city, what neighborhoods are selling, you know, that kind of stuff. Those stats, as you talk and you know that stuff, when your client asks you, you can confidently say, this is what's happening. Like I just had a conversation with my client a couple days ago about condos, busy market, you know, whatever, and you know, the you know, whether they should be buying a condo or not buying a condo and that sort of thing. And I'm like, you know what, I'm seeing, as you look at the solds, I'm seeing a lot more condo addresses popping up than residential. And whereas before it might have been only 5 or 10% of the sales every day had a condo address or townhouse address to it. Now we're seeing that creeping up to 20, maybe 25 on some days. Some days it's almost half. And you'll wholly, you know, so the markets are definitely picking up in that. And that's where, again, as agents, we need to know these stats and not memorize them, but know them so that when you're having that discussion with that buyer or seller or potential, you have some knowledge to speak to them about. And that's why we're doing what we're doing now for the next couple of weeks, is talking the trends in the markets. Okay. The next thing that I want to talk about, let's just go back to my, okay, let me just switch back here now. Okay, so the next thing that I want to talk about is where the business is coming from. Okay, so now we've gone through and you guys have, you know, kind of understand the market trends and you know to some degree in sales and when the busy months are and when they're not, or at least know now where to go to get it. The next thing, this is a report that can be generated off of Matrix. And so if you go into the Matrix, you go into reports on the far end side, and you can actually pull up the real estate trend indicator. This is a really good form to look at. This will help you guys start to go, where is the business? Where, you know, in Saskatoon, where is the business coming from? What price range? And so it'll help you guys if you're planning to do some target marketing in an area, working some for sale by owners, working open houses for other agents. This will help you determine where the volume is coming from and what's selling. So within this report that pulls up, it shows you how many 2-bedrooms are selling, how many 3-bedroom homes are selling, how many 4+ bedrooms are selling, and then the totals. Now I've highlighted the totals here because I ran this report as of January 1st of this year until the 6th of September. And in here, you basically, you know, under $20,000, well, guess, or to under 30,000 in Saskatoon, guess what? Nothing is ever sold. But you got a breakdown of some small stuff. But as you get into some of the bigger numbers, you'll start to see that there's a block in here. And but right now, year to date, we have sold in Saskatoon, we have sold just a little over 3,500 deals have gone through the board this year. Okay. Now, the one that I want to draw your attention to is this range right here. So under 300,000, we're less than 100 on every price point going down. But if we look between 300 and 450, so $150,000 window, we are looking at a total over 1,200, almost 1,500 listings that have sold. So guess what is the most active price point to be in?
450.
So if you want to be in the area and working a price range, doesn't matter east side, west side, doesn't matter. If you want to work a price range that's going to be the quickest buyer, the most active listing and possibility of selling, that one in Eastview, what was the price of it?
424.
Right in that range. Okay. And that's the point. Like when you're starting to focus, when you're looking at doing your business planning should be where you're also going to be marketing, because one of the things on that line that you're going to be working on is marketing. So where are you going to market yourself? Whether you're doing the just listed flyers, just sold flyers out to people, whether you are doing a farming, so you're just hitting an area, a neighborhood, maybe where you live in, whatever. These are the price ranges that are the most active. That's the areas that you want to work. The east, the Haltane, the Bradford Parks, on the east side, that whole swath all the way down to Adelaide Churchill, a lot of those homes are going to be in that price range. Eastview, those are the blocks that are going to be having the most sales. West side, the Confed, Pacific Heights, Fairhaven, Mount Royal, those are some of the neighborhoods on the west side that are going to be hitting a lot more of the activity. The new areas of Saskatoon that are building those little row houses, if they're some of them will fall into the higher up price range here, but again, it'll be within that range. So work those price ranges will give you your highest chance of return on your investment. Okay. The next price range, another $150,000 range, is between 500 and 750. So unfortunately, they don't do a breakdown like the other one, but even within that range, there's only 862 sales that have happened in that price range. And of course, everybody loves to chase the $1 million plus, but there's this number is growing, but it's 33 sales in total. So there was close to 700 agents, a little over 700 agents in Saskatoon or area that's selling property here in the city. And out of those 700 and some, there's only 33 people that have sold. And then some of those 33 are the same agents selling multiple, because that's kind of their little niche that they do. Everybody loves to sit in those open houses. Everybody loves to sit in those $750,000 to $1 million homes. But again, there's only been 70 of those homes all year that have sold.
Just a question, this 700 people, agents, they're just in Saskatoon, or even like we are working around Warman, all little towns, anything around Saskatoon?
Yeah, so Saskatoon, Martinsville, Warman, some of this little burbs around the city here will all be, but they're all licensed out of Saskatoon.
Oh, okay.
So, and so when you first log into your matrix at the very beginning, they'll have that little chart on the side to show you how many agents. Saskatoon's got the largest amount of agents, and so, but it shows that 709, I think it is, or something like that, that's registered in the Saskatoon region. So, but working these areas. So now when you're starting on the marketing, these are some really key areas to really start to focus in on. So, okay. Any questions on that?
How do you find more clients in this area? The stats are great. how to, like, I'm still just trying to find ways, and I'm sure you're on the same
Yeah.
boat, like, trying to find new clientele, because I've been taking the advice, I've been making calls, I've been handing out
Doing
business
the
cards
things.
and everything, right? And I've noticed like everyone knows someone who's a real, like I had a great conversation with someone, this lady I met yesterday. And then I was like, yeah, so I do real estate. She's like, oh yeah, my son does that too. And I was like 20 minutes into the conversation. It was like, great, you know?
Yeah, and so always like even those people like the son, because the turnover rate in this industry, as Gary has indicated, is quite high. And so never take that as a, oh my God, whatever. Get the name, get the number, even put them on your mailing list and continue to mail out to them, because that son might be new in the business and might wash out in a year. Now she knows nobody kind of a thing, right? So so that's where, keeping in touch with everybody, but a lot of it is a numbers game, especially as a new agent kind of thing. So it's just, again, when you go back to your day timer and setting time aside each and every day to do that prospecting. But the best way to do it, look for the active buyers and sellers right out of the gate. So open houses are active buyers all the time. So that will get you in front of active buyers automatically. So that's where working price ranges are key. And for sale by owners, as hard as some of them are to talk to, that's that's important. And you can use, even with for sale by owners, like a bit of an angle that you may take now with for sale by owners is because lots of times fear of loss for people is a big motivator. And so if you go in and you start talking to a for sale by owner and you say to them, you know what, the things are changing, the market's changing, the interest rates are going up. More and more people want to be protected, and they feel protected when they deal with a real estate agent. And so let me show you what I can offer you. Is there some reason why you're not dealing with a real estate agent? Oh, I'm not dealing with commissions. I'm not dealing with this and whatever. I had a bad experience. And you say, well, I'm sorry to hear about the bad experience, but not all agents are cut from the same cloth. Some are good, some are bad, some are ugly, some are pretty, whatever the case may be. But ultimately, this is, just would you give me the time to sit down in front of you and show you what I can offer? And this is where having your listing presentations are very, very important. And then you sit down and you talk to them. And with a for sale by owner, they're not going to be oh, Jamie, you're awesome. Yeah, okay, let me sign the paperwork here and we're done, right? It's never that way. It's going to take a few conversations with him to build some trust. And but again, it's all about the trust, but it's not trying to force them into signing anything. It's listening to their needs. Maybe it's, I'm looking for this. Maybe the angle that you take is, what are you looking for? Where are you going? Well, let me help you with that, because it doesn't cost you anything. And then once you find them that, more than likely they'll follow in and list their house with you as well.
Right.
So go after what they're looking for versus what they want on their house.
I have a success story with Frisbee.
Okay.
I got one.
Really?
Yeah, just last week, it just went active this morning. So it was a marketplace. I literally just reached out and was like, I forgot what I said exactly, but anyways, it turns out that it's not the seller, it's the property manager's daughter who was posting it for the property manager for the seller. So right away, she's like, yes, phone my dad. So I phoned her dad, who was the property manager. Went and met him that day. They had a previous realtor and fired said realtor because of a very long list of things that were not being done and were being done. Terrible. And they were like, we didn't know who to go to after this experience. We thought we just tried on our own, but you already seem way better than she was, and it went great. And now
Nice.
said property manager is also gonna list the place with me.
Yes.
So yeah, it does work, but I've also had 30 that have been like, no, I need realtors.
Yeah.
Absolutely. And
So it's
that's the numbers.
You kind of
game.
just have to, I
Keep
don't know,
going.
keep going at
Yeah.
it. Eventually you might get one.
Yeah.
But a lot of them are just like, no, or just don't reply because they don't want to hear from a realtor
Yeah.
at all.
Yeah, and that's part of it. So the buyers and the sellers are active. Then
Yeah.
from there, it's flyer drops, is
Mhm.
literally door knocking, getting in, walking the areas, and a good thing is to go around the office and say, do you have what do you have? Do you have a buyer that you're looking for that's nothing on the market?
Mhm.
Yes.
Mhm.
What is it? And then go out and find it for them. Now you have a dialogue. I have an agent in my office that's looking for a property in your area. They're looking for a bungalow. Are you open to other agents showing the property? And And if they are, then, I can represent, then you talk about agency and say, it's not a good thing to work with the same agent on both sides of the deal. It's a good idea to have a separate agent. So I could represent you in the listing and if the other agent buys it. So there's lots of little different angles that you can do with it, but it's very important that you work when you're working the angles and go from there. So
Makes sense.
okay. And so that's part of it. And then the rest is just, like I said, it's more just, doing the flyer drops continually. And it's kind of like you can send out to an area, you can send out 5 times, 6 times, and on the 7th time you get a deal. Because at least get a phone call kind of thing, because now, no one's moving, but all of a sudden Bob and Nancy just got notice that Bob's getting transferred out. So now Bob needs to talk to somebody, and your flyer just happens to hit that doorstep when that happens. Right. So those are the luck of the draw stuff and whatever. Social media, talking to our marketing department here, getting them to send stuff out for you on behalf of social media of listings, whether it be your listings or you got permission from another agent to advertise their listing. And so you can pick up an ad call. Those kinds of things are all very important. I think Dee Dee does that, right, Dee Dee?
Yeah.
Okay. So, but and again, then you get the ad calls, and again, you're I'll call it trolling, but you're looking for those buyers, and all of a sudden you get a lead or a bite, and you reel them in and try to get them as a buyer. So one of the best ways is marketing of properties. So again, talk to the marketing department and get them to send out listings that have authorization to be sent out, and so it looks like it's your listing,
Right.
and then they'll contact you. So yeah. Okay.
Sounds good.
All right. And I think I got to wrap this up here now, because I got a 10 o'clock meeting. So, next, any questions before we wrap it up?
Very good.
Okay. All right. So next week is Jeff Rathgaber will be here, and so we'll have, I'll have him talking more about market trends for the banking world and predictions of what RBC is talking of the fall and into next year, how the interest rates are going to impact. And I know he's going to be talking about some market trends going back over the years as well. So you can see when the interest rates were 3% and 4% and ultimately, 1.69. That was a dream. That was a once in a lifetime opportunity to get that kind of a rate. Never will that happen again, probably. I should say never, because everybody would say that never would have happened, but it happened. So, but the normal trend, 3 to 5% was the norm for many, many years. But now we're bumped up above that average a little bit. But again, the interest rates will fluctuate a little bit as everything kind of turns around. We'll see things kind of correct itself. So
Right.
Okay. Dee Dee, any questions?
No questions.
101 days on market. Oh my God.